Hey everyone, welcome back to our channel. And if you're new here, don't forget to subscribe and be notified for the latest updates to keep watching our videos because we want to make sure to keep you updated on the mortgage market in Canada. And today's video, we want to talk about the biggest news this week. That was the latest Bank of Canada announcement. All right, so the Bank of Canada cut rates again. This is the third time this year they cut rates again by 0.25. And what this means is that the prime rate is also going down by the same amount, and many of our lender partners, if not all, have already reduced their prime rate to 6.45%. Now, this is great news because the Bank of Canada continues its rate cutting cycle. All right, so the Bank of Canada made a significant announcement. They actually decided to cut rates again by 0.25%. Now, this is crucial and they just keep continuing the rate cutting cycle. And overall, they are doing this because our economy is shrinking, unemployment is going up, and great to see inflation is going down. Now, inflation being a 2% target is their main goal. There are other factors they're looking at, but inflation going down is definitely great news. And if inflation keeps going lower and lower, we should see rates going lower and lower as well. And we still have two more announcements this year. Now, why does this matter? This matters because cutting rates or increasing rates, this is a tool that the Bank of Canada has or uses in order to get inflation down. This is the only tool that they have in order to get inflation down. And this tool, or when rates go down or rates go up, this doesn't only impact mortgage rates, it even impacts car loans and even the interest rates on savings accounts at your local bank. Now, how does this impact you? So pretty much the Bank of Canada is cutting rates to stimulate the economy, but cutting rates benefits everyone, especially for people that are in a variable rate mortgage right now. So in a variable rate mortgage, a lender in that category is TD Canada Trust, and this is where your mortgage payment doesn't go up or down if rates go up or down. It actually stays the exact same. However, more of your payment now goes towards principal and less goes towards interest, and that's always great to see. Now, if you are an adjustable rate mortgage and a lender in this category is Scotiabank, this is where your mortgage payment actually goes up if the Bank of Canada increases rates or goes down if the Bank of Canada decreases rates. So in most recent news, we had a cut. Therefore, if you are in a adjustable rate mortgage with Scotiabank, your mortgage payment will be going down. So with every quarter point decrease, you should see your mortgage payment going down by about $13 a month for every $100,000 that you owe. So if you are in, for example, a $500,000 mortgage, now since this is the third rate cut, you probably will see your mortgage payment going down about $200 a month, which is huge. And this $200 a month now can be used, for example, to pay for your property tax if you live in a condo or townhouse. So that's great news to always see, costs going down. Also, if you have a balance on a secured or unsecured line of credit, usually a secured line of credit is called a home equity line of credit, also called HELOC for short. You will also see your interest only payment going down depending on how much you owe. Now, if you are in a fixed rate mortgage, there's no impact to you because your mortgage interest rate and payment does not change and it has no impact on what variable rate mortgages or adjustable rate mortgages are doing or even the prime rate. Now, if you are someone who is looking to buy a home, fixed rate mortgages will be impacted by the Bank of Canada announcement because when the Bank of Canada usually cuts rates, that means bond yields go down. And when bond yields go down, fixed rates follow. And after the announcement, the latest announcement, we actually had bond yields go down. Now, they weren't significant. However, we are expected to see a deep rate cut in the US this month. And after that rate cut, we could see bond yields go down further. And that may trigger lenders to reduce their fixed rates, which is great news for new borrowers or new home buyers because they should see lower mortgage payments and they should qualify for more mortgage money if they go with a lower fixed rate. Now, the Bank of Canada also had some commentary on the latest rate announcement. And simply, the weakness in the economy is pushing inflation down, they've stated. However, price pressures in shelter and other services are keeping inflation elevated. So it's a kind of a balancing act here. But overall, our economy is way weaker, and that's why we're actually seeing inflation going lower and lower. Now, experts say that we need more rate cuts. Simply, more rate cuts are needed in order to, stimulate spending to get the economy growing again. And experts are also stating that we may have waited too long to cut rates, and the Bank of Canada may be panicking, especially if we reach the 2% inflation target very, very soon. So what's next? We will continue to monitor reports. Important reports to look at are the employment reports, also consumer spending, as well as, overall economic reports, and of course the inflation reports. And we have to keep seeing those, how they're going to evolve in the coming months, because those items are very important in regards to the Bank of Canada announcements. Now, so far, for the rest of 2024, we have 2 more announcements scheduled, and we are very, very likely to see more rate cuts on the next 2 announcements. I'm predicting a 0.25 again, and then another 0.25 after that. We are hearing 0.5. Many people are saying 0.5, but I feel like the Bank of Canada is being very cautious right now, and they're taking a soft approach. Now, they weren't taking a soft approach when they were increasing rates. They're being very, very aggressive. But right now, they're not being aggressive with cutting rates. They're being very, very slow. And that's why I'm predicting 0.25 twice, which will mean a total of 0.5 by the end of the year further. So in total, that will be, we had 0.75 so far, 3 announcements, and then 0.5 to that would be a total of 1.25 to end 2024. That's it for today's update. I hope you enjoyed the video. I hope you found it very informative, and I hope it was quick enough to give you a good idea of what the Bank of Canada talked about in the last announcement and what's expected going forward. Please don't forget to like, share, comment below to see, what your thoughts are. I would love to hear your thoughts or what your predictions are for the rest of 2024 and even 2025. And I look forward to seeing you at our next video.